Hey everyone, George here with Wine Industry Network. Welcome to another episode of our Growing Forward series. Growing Forward is basically a virtual conference that we produce, which we release episodes throughout the course of the year, talking about new policies or addressing some of the challenges that our grower audience is up against. And today we've got a really good one for you. It's titled Managing Risk with New Fire and Smoke Crop Insurance Endorsement. We're getting to three different areas, but before we get into that, I want to thank our sponsor, Verity. Verity is a wonderful company, a great partner, and it's their support that allows us to continue to produce content like this for our grower audience. So thank you, Verity, for your support. And of course, I want to thank everyone here in our audience for joining us. If you haven't seen one of our Growing Forward sessions before, check out our YouTube channel. We've been doing this for a number of years. There's a lot of sessions up there. They're still very relevant, so you might want to explore those after you have a chance to watch this one. So in any case, today we're going to get into, obviously, insurance. We're going to talk about the new fire insurance protection smoke index endorsement for the 2025 crop year. We're also going to get into how risk management agencies determine, what qualifies as a smoke event, grower requirements for the claims process, how a claim payment is calculated, etc. And then finally, we're going to talk about the new Grapevine Policy, which was launched for the 2024 crop year, which provides coverage specifically for grapevine. So a really good session, and really glad you could join us today. We've got two terrific speakers. We've got Laura Hernandez, who's the Senior Risk Management Specialist for the USDA out of the Davis office. And she's going to be followed by Scott Sederker. Scott is the Associate Crop Insurance Consultant with American Ag Credit. So a couple of really, really good speakers providing some great information. So once again, thank you for joining us today. And I want to thank Verity for all their support once again. All right, why don't we get into it? I'm going to hand it off to Laura. Laura, why don't you take it away?
Hi everyone, my name is Roman Kozak, CTO and founder of Verity. We make it easy to implement and manage a variable rate strategy for your vineyard. Our technology can break up your existing irrigation zones into as many subzones as is needed to match the variability of your field, whether that's based on soil type, terrain, or interplanting. Then we can direct more water to the areas that need it and restrict water to the areas that don't need it as much. So if you have vineyard blocks that look like the one above, we can help you make them look like the one below. And there are a lot of benefits to doing this, such as increased revenue per acre due to quality improvements, a restriction in water usage, as well as a single harvest pass. Verity also engineers the most affordable irrigation automation solution for vineyards. The Verity block controller installs in minutes and brings your existing valves, pumps, and sensors online for automation, monitoring, remote control, and alerts. Everything is simple to use from your desktop or your mobile phone. So if you would like to learn more, we would love to chat, so please reach out and we'll see you in the field soon.
Yeah, thank you for that brief introduction. Yes, my name is Laura Hernandez. I am with the Risk Management Agency in the Davis Regional Office. And today I will be talking briefly about our insurance programs for grapes. I want to start by talking about the benefits of our programs. There are several benefits to crop insurance for grapes. For example, it provides a safety net for your farming operation. There is a multi-peril crop insurance program for grapes that is already in place. The premiums are relatively low. It interacts with FSA disaster programs, meaning that you can get indemnified by crop insurance and receive an FSA disaster payment. And the grape crop policy uses the history of your own yields. It is meant to be responsive to losses and give you peace of mind that you are covered and have a safety net in place. This is an overview of the grape insurance program. It has been available since 1990. It is available in California and 22 other states. In California, we have the program in 32 counties, and it may be requested by written agreement in counties where the program is not currently available. This graph shows the number of insured acreage since about 1990. In 2024, we had over 400,000 acres of grapes insured. And these are the basics of coverage. Causes of loss coverage for grapes are adverse weather conditions, fire, insects, plant disease, wildfire, earthquakes, and failure of irrigation supply. Below are the most common causes of loss in the last several years. In 2020, we paid out over $250 million for smoke taint. In 2021, the biggest loss at $78 million was dry, hot weather. And in 2022, we had a mix of significant losses like cold weather and hot, dry weather. The Grape Insurance program is unique for California and Arizona. For example, it allows insurance by type variety listed in actuarial documents. In California, we have 48 listed varieties and a catch-all for the all other varieties not listed in the actuarial documents. We insured more than 430 acres in California in 2023 that totaled over $2 billion in liabilities. The two varieties with the most insured acreage are Cabernet Sauvignon and Chardonnay. We also insure some acreage of organically grown wine grapes, as is shown here on the graph with the green. The crop insurance program is flexible. We have a coverage level range of 50 to 85%. In addition, we have supplemental coverage option known as SEO, which is available for grapes. This is an endorsement that stacks on top of the grape policy and provides coverage between your elected coverage percent and 86%. For grape policy coverage, producers can elect from 59 to 100% of the price. Contract prices are available if the producer has a contract for their grapes. If they do not have a contract for their grapes, the RMA has established prices which are based on the different fresh districts for grapes in California. Catastrophic or CAT coverage is also available. With CAT, the coverage level is set at 50% and the price election is set at 55%. CAT coverage costs $655 per crop per county. Under CAT coverage, a producer must have a loss greater than 50% to be indemnified. No options or endorsements are available with CAT coverage. And this chart shows that we have over 100,000 acres of grapes insured at CAT level. And just a reminder that the sales closing date to sign up for grapes is January 31st. The grape policy rates are favorable and we have good participation in the program. The premium rates are reviewed and adjusted every 3 years. The rates are on a county basis, are reviewed for actuarial soundness, and premium rates are calculated so that the producer paid premium is as close to the indemnities as possible or at a break-even point. We try to avoid huge swings in premium rates. Therefore, the effective premium rate will not increase or decrease by more than 20% in any given year. This is an example of how the rates have changed since 2018 in Napa County compared to San Joaquin County. Rates in Napa increased mostly due to smoke taint losses in 2020. The premiums are based on several factors such as rate data, acreage, coverage level, price selection, and the options and endorsements the producer chooses. The subsidy is deducted from the calculated premium. The subsidy percent can be anywhere between 38 to 67%. However, the subsidy gets lower as the coverage level increases. For beginning farmers or ranchers and for veteran farmers or ranchers, the premium is reduced, and if CAT coverage is selected, then the CAT fee is waived. In addition, beginning and veteran farmers or ranchers get the benefit of yield adjustments. Private insurance companies sell and service the crop insurance policies, and the premium rates do not change regardless of agent or insurance company. No rebates are allowed, no special deals or extras, like Super Bowl tickets, cash, offers to pay for the premium. That is not allowed. This chart shows paid premium versus indemnities paid in California. For the last 10 years, 2014 to 2023, more indemnity was paid than premium collected. I just want to point out that for 2024, we still do not have all of the data yet, and that is why it seems that the paid premium is higher than the indemnity. And the program actually works. The indemnity to paid premium ratio shows the amount of the indemnity paid per dollar of premium paid by producers. 2020 was a high loss year, and for every dollar of premium collected, the indemnity paid was $2.38. And I want to go over a couple of trends in the Grape crop insurance program. The average coverage levels are increasing, and more producers are choosing to purchase buy-up coverage than cat coverage. This shows that the program is working adequately and that it is providing a satisfactory product that producers want to buy. Other finer points that I want to touch on are what to do in the event of loss or damage to the grapes. In the event damage or loss occurs, contact your agent within 3 days. For example, if a wildfire loss occurs, file a notice of loss with your agent within 3 days of the event or damage. Don't destroy the crop until you have talked to a loss adjuster. And be aware that there is an unharvested price adjustment, UPA. The UPA is a harvest cost that is deducted from the price of the grapes when there is a loss and the producer does not harvest the grapes. For example, if the cause of loss is fire and the grapes were affected by smoke taint and the grapes were not on the vine, the UPA applies. When the claim is adjusted, the indemnity you expect to get may be lower due to the unharvested price adjustment. Please talk to an agent regarding the UPA. And aside from the grape crop policy, there is also insurance for the grapevines. It is a dollar plan of insurance. It is a new program that began in 2024. It insures the actual vines. For grapevines to be insured at a minimum, they must be adapted to the area and grown for the purpose of producing grapes intended to be sold as fruit, wine, or juice, or for human consumption. And the vineyard must have at least 600 vines per acre. The program is available in 35 counties in California. The program is also available in other states like Idaho, Michigan, New York, Ohio, Oregon, Pennsylvania, Texas, and Washington. And coverage levels are cat and 50 to 75%. The grapevine insurance policy only covers destroyed vines damaged within the insurance period. The covered causes of loss are freeze, hail, flood, fire, or failure of the irrigation supply. There are no indemnities for partial damage, and losses due to insects and diseases are not eligible. The insurance period begins December 1st of each crop year and ends November 30th of the following calendar year. The important dates for this program are the sales closing date, the acreage report date, and the cancellation date, which are all November 1st. For crop year 2025, the sale closing date has already passed. It was November 1st. The Grapevine program insured 7.5 million vines in California for the 2024 crop year. 94% was at cat level. The cost for cat insurance is $655. The average paid premium per vine insured at a buy-up level coverage was 21 cents. In this slide, we see the number of vines covered in the different states. California has the most vines insured, and the insured vines were mostly in the counties listed here: Lake, Mendocino, Monterey, Napa, San Luis Obispo, and Sonoma. To wrap up this presentation on the federal crop insurance program for grapes, I just want to go over a few takeaways. First, the Grape policy has many unique features that are beneficial and can be customized. Rates are not calculated to result in a profit to the government. The cost of the insurance does not vary by company or by agent. The losses cannot be the result of marketing issues or lack of good farming practices. Future premiums are not based on your own losses. And it just makes sense. It is a good business decision to buy crop insurance. Thank you for your time, and I hope this brief slide deck on the grape insurance programs was helpful. If you have any questions, you can contact us at the phone numbers and the emails listed on this page. Thanks again. And now back to George.
Thank you, Laura. That was terrific. Once again, we appreciate you joining us and helping to provide some of this really important information to our audience. Next, we're going to hand it off to Scott Zediker. Once again, Scott is the Associate Crop Insurance Consultant with American Ag Credit. Scott, why don't you take it from here?
Thank you very much, George. I just want to thank the Wine Industry Network for giving me the platform to talk with you guys about crop insurance. So my name is Scott Zediker, and I'm the crop insurance agent here at American Ag Credit. I cover the Northern California region and primarily service wine grape growers in Napa, Sonoma, Mendocino, and Lake counties. Just to give a little background about myself, I did grow up on a family farm where we grew apples, pears, and grapes, and was a vineyard manager for 10 years as well. So I know a decent amount about production farming and how crop insurance can help protect your operations. So to get into it, I'm going to talk about how to manage your risk with crop insurance. So here are the topics I'll be covering today, and the major topic to cover is what is FIP-SI? So what is the Fire Insurance Protection Smoke Index Endorsement? This is brand new for 2025, and we thought it would be a great idea to give growers a little more information. I'll go into the claims process, any additional considerations regarding FIP-SI, and look at potential coverage from a historical reference with smoke events from years past. And lastly, we'll finish up with a Q&A. So what is the Fire Insurance Protection Smoke Index Endorsement? As I said earlier, this is brand new for 2025. It is additional protection against fire and potential smoke taint damage to wine grapes. The coverage is based on county-wide losses, not vineyard location specific. These losses are determined by smoke events that are accumulated throughout the insurance season. Just to speak to this a little more, once 13 or more smoke events are experienced by a county, that is when the eligibility for a claim starts. The coverage of FIP-SI covers a portion of your deductible from your current MPCI coverage level up to 95% of your total crop value. So in essence, FIP-SI will allow you to protect up to 95% of your wine grape value. Here's an example of how the coverage level looks with and without FIP-SI. So this is a scenario with Cab Sauv valued at $200,000 with an underlying MPCI policy coverage level of 75%. So the bar graph on the left shows your coverage levels and coverage amounts without the FIP-SI endorsement. So as you can see, your MPCI policy covers 75% of your crop value. So $200,000 of total crop value times 75% equals $150,000 worth of protection. The deductible is $50,000. So you have to experience yield losses of $50,000 before collecting a claim payment. On the right is a graph showing your protection with the Fire Insurance Protection Smoke Index endorsement. So you have the same underlying MPCI coverage of 75% with that $150,000 of coverage. But then at the top, you'll see with FIP-SI, it adds an additional 20% of smoke coverage. And the deductible decreases from $50,000 down to $10,000. So that 20% of smoke coverage protection from FIP-SI is pretty easy to calculate. You just take the 95% coverage from FIP-SI and subtract your underlying MPCI coverage level. In this case, it would be 75%, and you get 20%. So what additional benefits or protections does FIP-SI provide in addition to your underlying MPCI policy? So first of all, it increases your overall coverage. From your underlying policy, the highest coverage level you can get is 85%. Whereas if you add on the FIP-SI endorsement, you can cover up to 95% of your total crop value. Additionally, losses are based on county-wide smoke events. So you do not need to experience a yield loss to get FIP-SI claim payment. Additionally, the entire county does not need to be affected by smoke to potentially receive claim payments. As long as any portion of the county has a smoke event or experiences wildfire, that county will obtain a total smoke event day. So, for example, if the northern portion of Napa County has an extremely smoky day, but it never blows into the southern portion, the entire county will still be considered impacted. In terms of claim payments, your crop can still be completely harvested and sold while still getting a claim payment under FIP-SI. Lastly, the smoke events and coverage get counted all the way up until November 10. So what are the differences between the smoke taint coverage on your MPCI policy versus with the FIP-SI endorsement? So on your MPCI policy, you need to submit a notice of loss to your insurance adjuster, your insurance agent or agency. You have to submit positive smoke taint sample results and winery rejection letters. Additionally, you are required to have a yield loss to initiate the claims process. With the FIP-SI endorsement, many of these requirements are not needed. So you do not need to submit a notice of loss. You do not have to send samples in to an approved laboratory and get a positive result. You don't have to receive rejection letters on your fruit from wineries. And lastly, you do not need to specifically experience yield losses to be eligible to get a claim payment. So I've been talking a lot about smoke days and smoke events. So what is considered a smoke event? This would be a day with heavy smoke density. Now, the smoke is measured during sunlight hours, but the smoke does not need to be present throughout the entire 24-hour period of a day. So as long as there is smoke that is identified at a particular point of the day, then it may be considered a smoke event. Now, the smoke is measured by NOAA or the National Oceanic Atmospheric Administration's hazard mapping system. So there is an analysis performed which identifies smoke plumes and determines if they are heavy, medium, or light density. The analyst will then determine the borders of that smoke presence and essentially draw lines around them. If one of the smoke plumes is identified as heavy, then that day will be considered a smoke event. So that those borders drawn around that smoke are overlaid onto this different counties using GPS, and wherever that smoke laid, in terms of which counties it covered, those will be considered smoke events. And a cumulative running total of those days will be performed throughout the insurance period. So the running total will keep increasing throughout the season. So about the claims process. So as previously mentioned, you do need 13 smoke events to start being eligible for a claim payment. So 13 smoke events or days is considered the starting threshold or trigger for a claim. Additionally, claim payments do increase with additional smoke events experience. So the more smoke events, the higher the claim payment. And this is true until 100% of your FIP-SI coverage is reached. A very important note is that the higher the underlying MPCI coverage you have. So let's say you had a 75% coverage level on your underlying policy. You need fewer smoke days to get that full claim payment versus someone with a 50% coverage level. So the higher underlying coverage, the fewer smoke events needed to get higher claim payments. This is a little bit better observed through this graph. So here are a couple claim examples when it relates to FIP-SI. So on the bottom of the graph, so your x-axis, you'll see those numbers indicate different smoke days, essentially. So you'll see it goes from 0 all the way up to 50. Across the top, you have different coverage levels on your underlying policy. And the tan lines underneath represent each coverage level. The green line represents the amount of payment you will get under FIP-SI based on the number of smoke events. So we'll take an 85% coverage level, for example. The intersection between the 85% bar and that green line is 25 smoke days. So at that intersection, you receive 100% of your FIP-SI payment. So if a county experiences 25 smoke events and you had an 85% policy, you get a full claim payment. Now, let's move on to the 50% MPCI policy. You move all the way to the right in that red box. The intersection between the green line and that tan bar is all the way at 48. So if you have a 50% MPCI policy, your county needs to experience 48 smoke events to get 100% of your FIP-SI payment. So this is a pretty good representation of the relationship between your underlying MPCI policy level and the amount of payment you'll get based on smoke days from FIP-SI. Regarding the claim payment and insurance period, the claim payments are made automatically. So once the Federal Crop Insurance Corporation determines that a grower's county met or exceeded the county loss trigger, payment will be made following the insurance period and within 30 days after the later of the date that the FCIC released the counties that met that trigger, or once the conditions in the basic provisions, sections 14F 2-4 are met. Again, just to reiterate, some of the great benefits of FIP-SI are that no notice of loss is required. Winery rejection letters aren't required. You don't need to submit positive smoke taint test results. And FIP-SI isn't based on your yield losses. It's based on potential county-wide impacts. The insurance period for this endorsement begins on June 1st and ends on November 10th. So starting on June 1st, smoke events start getting tallied and start getting accumulated all the way up until November 10th. So this insurance extends for a very wide range of time. Here's a quick coverage calculation for FIP-SI. I thought it would be beneficial just to run through the numbers really quickly. So let's say there's a Napa County grape grower with 10 acres of Chardonnay. They have a yield average of 4 tons an acre. They get $5,000 per ton, and they have a 75% underlying MPCI coverage level. So to get to your total crop value, you take your acres times your 4 tons an acre, multiplied by your $5,000 price per ton, which results in a total crop value of $200,000. So your coverage on your underlying policy is your $200,000 total crop value times 75% from your underlying policy, which results in a liability or coverage of $150,000. To determine your FIP-SI coverage and crop value, you take your 95% coverage level from FIP-SI, subtract your coverage level, which in this case was 75%, you get 20% of coverage. You take that, multiply it by your total crop value of $200,000, which results in a $40,000 protection amount for FIP-SI. So here's how your claim is calculated. And this is a good slide that shows how the increased number of smoke events results in higher claim payments. So every day's worth of smoke events has a referenced smoke loss factor. In this case, for 23 smoke events, the smoke loss factor is 0.0823. So you take that smoke loss factor, divide it by your FIP-SI coverage. So with a 75% coverage level, FIP-SI covers 20%, and that results in your payment factor. And in this case, it would be 0.412. You can also look at this as a percent. So roughly 41%. So you multiply that by your FIP-SI value of $40,000 and get your claim payment of $16,480. So if your county had 23 smoke events, you would get claim payment of $16,480. Now, let's say the number of smoke events increased to 31. You'll see that that smoke loss factor also increased. So increased from 0.0823 all the way up to 0.1873. So using the same math, you come up with a payment factor of 0.937 or roughly 94%. So when determining your claim payment, you're going to get 94% of your FIP-SI value, which results in $37,480 worth of a claim payment. You may be wondering, well, what's the coverage and what's the cost of the premium? Using the exact same example, with a Napa County grower, 10 acres of chard, 4 tons an acre, getting $5,000 a ton with a 75% coverage level. Here's a kind of a truncated quote where you have your plan, your level for FIP-SI, which would be 75% to 95%, your acre guarantee, acre coverage, acre premium, total coverage, total premium, and producer premium. So the important columns to look at are the total coverage, which in this case would be $40,000. And this coverage would come at a producer premium of $2,740. So you're getting $40,000 worth of protection for $2,740. It is important to note that there is a subsidy being applied to this premium. The federal subsidy for FIP-SI is 65%. So the federal government is covering 65% of the cost of FIP-SI in this case. I think that's important to note because it is one of the higher subsidies being supplied by the federal government when it comes to crop insurance. I also wanted to look at FIP-SI through a historical lens and just reference some previous years to show the different smoke events that we experienced in the past. So in these maps, you'll see that the darker the blue of a county, the more smoke events that that county had in that year. So in 2021, obviously fairly recent, and a fairly, for lack of a better term, bad smoke year. With our counties in the Northern California region, you had Mendocino with 34 smoke events, Sonoma with 23, Napa with 23, Lake with 29. So in 2021, if you had a fairly high MPCI coverage level, you would have gotten a claim payment and potentially 100% of your FIP-SI value. Now, 2020, very infamous year. You'll see that the county colors got much darker in blue, and the number of smoke events increased by quite a bit as well. And if you start looking at those smoke event numbers, they're fairly high with 42, 38, 47 smoke events. So in 2020, if you even had one of the lower underlying coverage levels on your MPCI policy, you probably still would have received 100% of a FIP-SI claim payment. 2018, not thought of as quite as bad of a year, but it was additionally a pretty impactful year in terms of smoke damage. You'll see Napa had 32 days of smoke, Sonoma with 25, Mendocino with 37, and Lake with 49 days. So FIP-SI would have kicked in for many growers in that 2018 year as well. And I wanted to show 2012 for a quick reason. As I stated before, the entire county does not need to experience smoke to be counted towards a smoke event. In this case, much of the smoke in 2012 stayed up north. It did not travel south. And I wanted to show this because if you were a Mendocino grower, and let's say you had grapes in Hopland, definitely towards that southern portion of Mendocino, you still most likely would have received a claim payment from FIP-SI, even though you did not see any smoke in the sky. So just wanted to show the relationship between not having to experience smoke yourself to potentially get a claim payment and be protected from smoke. All right, well, that is my presentation regarding the Fire Insurance Protection Smoke Index Endorsement. Wanted to give a big thank you to the Wine Industry Network for giving me a platform to bring additional details regarding this brand new endorsement. I'm hoping that I gave some good information to allow growers to make a determination on how FIP-SI can increase your risk management strategy and at the end of the day, increase the protection on your grape crop. So thank you again, and you'll see down below my name, Scott Zedeker, with my title, email, and phone number. So if you have any questions or interest in learning a little bit more, feel free to reach out. Thank you very much.
Well, thank you, Scott. That was terrific. And once again, I want to thank Laura for all the information that she provided. I want to thank everyone in the audience for joining us. Once again, if you like this session, go ahead and follow our YouTube channel. Check out some of the other sessions that we've produced. And last but certainly not least, I want to thank Verity for all their support and their sponsorship. Thanks, everyone.